Okay, so I would start from, I would replay the bars and I start from that high.
Okay.
Good. So, uh, when it comes to premium and discount, you want to pick the obvious high and the obvious low on your higher time frame, such as weekly and monthly. Although you can do this on every single time frame, but for the sake of having a broad view about it, we are going to be using with the weekly charts. So on the weekly charts, we actually want to pick when was the last swing low and when was the last swing high. The reason why we do that is because we want to frame what the dealing range is. And by the dealing range, I mean where has price been trading in and where will price continue to trade in. So for instance, we have, I'll just play this a little bit. Yeah, post it here. Good. So when the market is like this, we can see it traded up all the way from here to this area here. We had a massive buying pressure. And for the first time, we have this move to the downside. Number one, this move has broken market structure because if you look at this other block, it was traded through. And if you look at this swing low, this is weekly, so we'll be considering the lows, the tip of the wicks.
Okay.
So if you look at this low, it has been traded through. Although market did not close, but daily, you will see that the market has closed below that low. Okay, so we would assume that that is a lower time frame market structure break, such as daily time frame. So in a situation like that, we can now say price is potentially bearish or price is potentially going down. Or how would I put that? Let me use another word that is okay. We can say, because of what we've seen here, that price has a potential to do a deeper retracement or even a reversal. So what we want to do around that time is that you are going to pick the high. We are going to do like 3 examples. We'll pick the high and then we'll pick this low. So this high to this low becomes our dealing range.
Okay.
Yes. So we can call it, we can label this as your SI liquidity, and we can label that as our buy side liquidity. So once you are done with that, you are now going to take your fib. Since it is an uptrend, right? This initial move was an uptrend. We are going to plot our fib from the low to the high. But if we are looking at a downtrend,
okay,
plotting it from high to low. So since this was initially an uptrend, I'm going to take my fib 2 now. I'll swipe it from this low to that high. Boom. So I already have my fib configured to ICT settings. I don't know if you have. Okay, I'll send you a PDF that is going to help you to
yes,
that configurations as well. Or you already have it?
I don't have it yet.
Okay.
Please, if you send me, I appreciate.
Okay, hold on. Let me just send it now so that I don't forget later.
Okay.
Okay, I've sent it. So when we are done, you can open it and follow the instructions so that you have the same settings like this. You can also, if you have MT4 installed on your system, you can also use the same settings. So if you after setting up your fib, you are going to have all this, and between here to this level here is 50%. So you are going to mark that 50%. You can see it's 0.5.
Yes.
That is the center of this high to this low, and that will be our equilibrium, right?
Yes.
So that's the midpoint. Midpoint is the 50% equilibrium. So you can just write it there as equilibrium. Then we can now do something. Since we know discounts, price likes to buy from discounts, right?
Yes.
So we are going to draw a little box from this low to the 50% exactly like that. Then you can change the color to green. Since discount is buy and green can represent that buy.
But yeah.
So we'll leave that at green like that. Then you can clone it. By cloning, if you want to clone it, you can just look at these 3 dots.
Okay.
Then you click on clone. And then you can now move it. You can move it above that other one. You can see it meets up perfectly. So that means the center that we drew is correct. So we can change this to red, since we know that when price is in red zone, that's a selling or sell zone. So once you are done with that, your FIB tool has done its job, and now we can remove it. So what we have now is that we've been able to plot our discount and also our premium. So next thing is you label it. This is discount, and then the next one above it, as your premium price. So this price is in premium and it has made a U-turn like this and has also broken market structure, which means we are bearish. Then we can now start looking for sell setups. But mind you, if price has not done this yet, it might keep going up. In a situation like that, don't assume this concept yet.
It's gonna come back to it. Yeah.
Since we know it has not broken structure, it can just keep going up. So once you are done with that, you leave that, and then you can now have a bias. You already know which side of the market we are headed. So here, I'm going to play it on, this is weekly charts. You can see that now, boom. What I was explaining yesterday is happening here too. You know, look at this other block. I told you got traded through, right?
Yeah.
Then what happens? It got retested. It got retested for several weeks, and then finally dropped. On this, after dropping, we have a new low. Remember, our reference point will no longer be this area.
Okay.
Yes, because of what happened here could have been the deep retracement, but they tried doing that, but this other block could
Fail.
Yes, this other block did not allow price to push into the upside. So in that situation, it broke down and then it broke market structure. Breaking market structure is this weekly low here.
Yes.
So that weekly low has been taken out, and now this new low to this high can be our reference point for this retracement trade. You understand?
Yes. Yes.
So we can expect that price is going to trade into this area back before it continues dropping. And that also means I do not expect price to come to close back above this entire range. If it does that, it might mean market structure break and it wants to continue up. So what we
Okay.
are doing is that we are just trying to be systematic, and we are just trying to say, if price does this, this is what normally follows. So now let's play it and see what happens. Now, can you see that? Can you see that? So
Yes.
price came back into this area that we marked for a retracement, and then now it is selling. So another thing I will do is this last up close candle, I would probably mark it. Okay, I'll mark this one. Can you see? I mark it, and then that becomes my weekly order block. So such order block is a very strong order block, and if price comes back to retest it, it might be a good time to take a sell. Can you see that? Retested
Yes.
nicely, and now it's going down. Let's see, maybe it will come one more time. All right, so I've already proved the concept for you right here that let me pause this. That price likes to move from premium into discount and from discount into premium. So you can see price got to this high and now it's going down. It would probably come all the way down here, and then we would see what it wants to do next. So now let me just play this to the end and then let's see what happens. So you can see tested this bearish order block, came all the way down. Okay. Good. So I'll pause it here. So lastly, look at the low here, the low of this discount, and look at the new low that has been formed. You will see that price left this premium price, traded into discount, and then it found a discount array in order to go back into premium.
Okay. What is the array?
What is what?
What's the discount array?
Okay. Now, well, what we would do, we would like to see this gap here. Can you see this gap?
Okay.
And
Yes.
behind the gap, we also have this weekly bullish order block.
Okay.
So I'll take it to the last down close candle, and that is it.
Oh, okay.
Price dropped into it, bounced off, came back up, consolidated inside before finally bouncing up. So that is a discount array. The liquidity void got filled. The bullish weekly order block also got tested, and then price rallied. So if I pick this ray and I place it on this last down close candle, like that, you see that it tested it perfectly well before going up.
Yeah. Yes.
So in here, I can tell you, if you look at this low and this low, and you go to the same weekly chart on DXY, you will find SMT divergence, and that will guarantee that this level is going to push price up.
Okay.
Now, they went up. The question is, where are they going to? They are going to premium. While going into premium, they are going to do two things, or they will do one of two things. They can either decide to hunt the high of that premium price, or they decide to respect the PD array that is inside the premium price. Here, in this discount, they could have hunted this self-sell liquidity, but they decided to respect the PD array. Here, we also have a premium price, and they can decide to either hunt the buy-side liquidity or respect the last up close candle before going down. So what we will do now is we are just going to represent this up close candle. So I will choose, okay, I'll choose this one. This was the last time price support. This one here, before start selling. So I would expect price to come into this area and then finally shoot all the way down. So I'm just now, I've been able to blend what has happened in the past to what is what has been happening of recent. So my present trade when it comes to premium and discount is that price came to this discount premium array, and then it sold off from there. Let's watch. I seen that.
Yes.
It went into the premium PD array, and now it's going down. So we went for a retracement, and then it's selling. Where is it selling to? It's either going to sell for this self-stop or sell for this discount array. So that is the end. So see where we have presently. Yeah, here presently.
Yeah.
Sorry, there's a lot of annotations on the charts.
No, it's okay, no problem.
Okay. So that is how to use this concept. So I've shown you 2 examples and how they connect. You can see this buy-side liquidity inside this premium to discount. Price traded from this premium into discount, from discount back to premium, and from premium now we are going back to discount. When it gets to discount, and it takes out this sell stop, then it will keep forming new lows. Price will keep dumping until it hits a much higher time frame discount array or discount buy sell stop, sorry, before we can now find some momentum to go back up. Okay, so 2 things can happen. Look at this black candle here. It can test black candle and then continue shooting up crazily like that. Can now start shooting up, take this high or respect something here, go back down. So that is how market is framed. It moves from discount to premium, from premium to discount. So that is like the overall, that must be one of the things you consider when you're carrying out your top-down analysis. It's not okay to just know about or be able to carry out your, what they call this, your, like a lot of people when they're doing their top-down, they only focus on liquidity pool, and they also focus on PD arrays and so on, but they forget to find out which side of the equilibrium is price sitting at, and which side is it going to next. And that side is going to next, what is the PD array that's there, that price is going to respect. Okay, so I'm very sure that with this small explanation, you already have an idea about how to plot these 3 things on my chart.
Okay. Yeah, I have one question.
All right.
So for me to find that, like this one, you say the daily range, and we are on the weekly chart. So this is gonna be the weekly range, or this is the daily range. Like when you want to find that leg, or you can find it on the 4 hours or 1 hour, whatever you're trading, or it just has to be.
You can do this on any time frame.
Okay.
You can do it on any time. Even you can find discount and premium on even 5-minute charts, because even on 5-minute charts, you find that price is doing the same thing, moving from high and trading into a premium array and going into discount array, even on any time frame. What we are just trying to do is, like we're trying to say, for the next 6 months, what will be the trend? Okay? Like for instance, since May of this year, Euro USD has been bearish. Now, having that information, every day you wake up, you know what to do. Okay?
Yeah.
When you're
So
on
you
one time frame, You know what.
Yeah.
So that is why this is more important than saying. And we can actually go to lower time frames. Let me use something else like GBP, JPY, and let's use 1 hour charts. And I can still show you the same thing. Zoom out so that okay, for instance, if I want to frame something here, let's say I want to frame this. Hold on. Okay, let's say I want to frame my entry around this high to this low. Okay, I want to frame my entry around this, from this high to this low. And I'm trying to find out where the discount is and where the premium is. Please, you must always remember that when we're talking about discount and premium, it is connected with all the PDRAs. Full meaning of PD is premium discount. So it's connected to all the PDRAs, and all the PDRAs, they are all the things we've been talking about that we would also talk about, order blocks and so on. So when price is every single time you are looking for a retracement trade, you are just saying the same, you are saying the same thing as you are looking for price to move from discount to premium or from premium to discount. And when it does that, you are trying to find your array, whichever one exists on that chart that you are going to trade off. For instance, if I'm looking at this low and also this high, I already know the order flow to be bearish, and I'm looking at this low to this high. All I have to do is I pick this, I just use the fib. You notice ICT likes to use fib a lot because it helps him to know what side of the market he is, if he's in discount or if he's in premium. So from here to here, and now price has made this leg. Price trading from this high to this low, one might not make money, or you'll be waiting for price to retrace so that you can enter and then make money here. One might get entry here, but I'm trying to say that what if you come online and you want to trade and this is all you have? This is all you have. So all you have to do is pick from here to here, and then the retracement is now what you wait for. So in the retracement, we can find the equilibrium to be around this area, right? 50%. That is our equilibrium. Our equilibrium. And also, zero level is our buy side liquidity or buy stop. So what I did on weekly, you can see I'm doing the same thing here. And this low too is our sell stop. Okay. So now price is in discount, but in order for me to sell, I need it to be in premium, right?
Mm-hmm.
So I've been able to plot my fib, and I come online and I see that price has already made it to discount. If I take a sell here, it's very, very stupid. It won't make any sense. I come online, I see this drop, a lot of FOMO traders who don't understand price action. They see that massive candle, they just come here. Or maybe after this candle close, this one, they see this one and then they just take their sell. And then they put stop loss around. Okay, adjust this. They put stop loss around this, the high of that massive candle like that, and take profits down there. Then let's see what happens. You can see that it's not really a smart money move, because if you want to be a seller and you want to make profits, you must always buy cheap and sell high. You sell something expensive, you make money, but you bought it cheap. That's when you make money. So we are not trying to sell something that is cheap by selling it here. So you have to wait for that price to trade into premium. That is, with respect to the buy stop and the sell stop, there has to be a retracement into premium where price is now expensive. Let me put it that way. And how do you know how do you know that price is now expensive or is now in the expensive range? That is when you now use your PDRAs. And question now is, what PDRA is present on this chart? PDRA present on this chart is nothing less than this. Okay, well, we are done with the fib. I'll remove it. I'll remove this one so that everything is now. If you look at this massive candle, you can see it created a liquidity, a fair value gap, sorry. And we can take it from the last candle, the candle before and the candle after, right?
Yes.
So the gap in between is in balance, and we need price to rebalance that particular price. We'll get there, with time we'll get there. We need price to rebalance that price that it has, that particular gap is created with this candle. And that is where you expect price to become expensive again, inside. So any trade you take inside of this area would be a good trade. Let's even say you take it right here and you put your stop above that area. It's still better than someone who sold down here. You understand? So, but what I like to do is, anytime I draw my fair value gap, I always find the 50% of it, because I believe inside your fair value gap, the same way I've been able to draw a fib to match the highs and the lows together, we have the same thing here. Okay, so I like to use it. If it's big enough, you can draw fib so that you can pick the 50%.
For those two, okay.
Okay, so the 50% is right here. So after doing that, you can remove the fib. And now on the 50%, that is where I like to place my own limit. I place my limit and then I put my stop above this high. I put my stop loss above this high, maybe like 5 or 10 pips above.
Okay.
Right there. Then you set your take profits. If you want 5 RR, you set 5 RR. Of course, it's not really a matter of what you want, but there's a way to do this as well. So,
okay.
You can see eventually price even did more than 5. So that is it. What I've done here, I've just been able to find it discounts the premium price, and how you are able to take a sell from premium. We don't want to sell something that is cheap, that is cheaper than the buying price. Okay, so that is just it. So any question?
Not really.
So
Uh,
we would. I think we've done almost 4 examples already. So what you will do for me is you are going to use dollar index DXY, and
okay.
you are going to, dollar index is the inverse, is the opposite of Euro USD, right?
Yes.
Good. So what we did on dollar index, you are going to now, what we did on Euro USD, you will do it on dollar index, but it will now be the opposite side. So that will be your assignment, and you have to submit today.
Okay.
Yes, you have to submit it. It's very simple. Just draw your fee, find the high, the low, find the discount, the premium, and show how price went into the discount and price went up.
Okay.
Yeah.
And put it like the way you put it, the lines and the buy sign, everything. Or
Yeah, make it something like this. Something like this. So,
oh, okay.
since this one came all the way down, DXY will now go up. So that means
Oh,
your discount, so price is trading into discount here. That means for DXY, it will be trading into premium from discount.
okay.
This is it.
Okay.
Right? So
Yes.
it's trading from discount to premium. Why? So the same way we have high to low, you are going to draw your fee from this high to this low. Then you take 50%. Then you put the boxes, the 2 boxes. The red will be above, the gray will be below. Then you show the market structure and where price is going to, and so on. So
Okay.
that is all about discount versus premium.
Okay, good. What's the next?
The last part of using this fib is what we'll talk about next, and that involves how to frame your entry based on which part of the PDRA price is. For instance, let's say we'll go back to Euro USD. Let's say, oh, this is so, okay, let's use something else. Let's use this. Let's use this area. I want to find a very neat one so that it'll be easy for you to understand.
Okay.
All right, I found one. So let's say from this low to this high on weekly charts, if you draw your fib, and then you draw your boxes around it. It should be red. Okay. Take it like that. Okay, so this should be green. Now, I've shown my discount and premium, and then the next thing is, since price is, okay, hold on. So you can see this, right?
Yes.
So in a situation like this, that I'll just play it forward a little to the point where we have the market structure break. Good, right there. So here we have the market structure break that confirms that price has already respected this bearish order block right from this low all the way to the high of the last up close candle. Okay, so price rejected this area and now it is going to come to this for this low, or at least this bullish order block. So how do you frame your entry around that? Even for the fact that we know that price is in premium and price is still very expensive, and we need to buy it and we need to sell it so that we can buy it when it becomes cheap, and then we'll make profits. So all you have to do is you pick a refined order block, such as these two candles here. You mark them forward, and then when price comes back into those two candles, that is where you can now start looking for entries. Okay, so it almost touched it, or should I? Okay, it actually did. Let me draw it. Let me draw the order block well. Make it as okay. So you can see that it precisely touched the bearish order block before rallying to the downside. So what this actually means is that we are above the 50%, and every single time price is above the 50% in a bearish order flow, we can be looking for our setup to go short. Okay, exactly.
Okay.
Yeah. So another thing is, if you look at from this low to this high to this particular level where price came into this bearish order block, we had this nice market structure, and we had price create this high, respecting this level, broke the high, and then retraced into this level precisely. So even you can see that all this happened in discount to buy the premium, right?
Yes.
Good. So that's just the concept. So trying to draw this thing is actually very nice, because it will kind of just tell you which side of the market you should focus on at the moment. So you do your assignments, you will submit today, and I would try to frame some examples, up to 5, and now I'll send them to you so that you study them personally.
Okay.
So
Okay.
I've recorded the class. I will upload it on the Google Drive so that you can download it and we'll watch it later.
Yes, please.
So
Yes. Thank you, coach. Thank you.
For today, I think this is all we have for today.
Okay.
Next week, we'll be looking at liquidity void and fair valuation, like I said yesterday.
Okay.
From there, we would